Okay, welcome back to our channel, MegaWhale team. Thanks for tuning into tonight's video. We're going to be taking a look at Bitcoin today, talking about the log scale, talking about the Bitcoin dominance chart, and looking at the standard Bitcoin chart. We're going to talk about the long term, the short term, and a few new discoveries we have found within the chart that can potentially indicate I would say a glimmer of hope for the bulls. So let's dive right in. So first and foremost, guys, the Bitcoin price is playing out pretty much precisely as we predicted. I'm going to go ahead and show you a post I made way back from November when Bitcoin was still in, that high 50k range, and we said, Bitcoin was going to crash downwards here, find a little bit of support around 40k, bounce around a few times, and then head down to that 200-day moving average. We showed you this chart first before any other person out there. We were telling you 200-day moving average. All right, we got this prediction using just the same analysis we can see here. We did the rise over run of the distance between the current market price and our projected bottom, which was the 11th of July, applied that to the previous periods, and then copied and pasted it along with the same diagonal trajectory. We're going to do the same thing here. So heading back here, I did the same thing already on the chart, guys. We've pretty much done exactly what I said. We came down, we bounced around at 40k a few times, we had a higher high here, and we look back on the chart, higher high, and then we're going to crash back down, all right? And we just use that rise over run method again to make us, this 200-day moving average. We can see where it's projected to go against the trajectory. Here it is, all right? We draw it in 24,000. So that's how we got to our target. That is where is our short-term bottom for Bitcoin. And obviously our larger scale bottom, if the market goes absolutely tits up and the economy goes absolutely downhill, we have a lower target of around 12,000. I've already said many times, I do not believe we will reach 12,000, and if it does, it will be one of those things that would be caused through catastrophic financial damage globally on all markets, and it's just one of those things you can't really predict, and I definitely don't want that to occur. I've already said many times, I benefit a lot more when cryptocurrency goes up. I don't want to be bearish. I don't want the price to go down. I want to be a moon boy. I want the price to rise. I want it to be green. I want to make profits. I want everyone to make profits. That's just what it is. But the reality is, guys, I'm an objective analyst. I look at the charts. I look at the facts. I tell you how it is. And the reality is the chart was very bearish. The chart was very bearish, and it still is very bearish. If we go ahead and we take a look at the 3-day chart, we have in fact lost the 200-day moving average on the 3-day chart. Now, maybe for a lot of my viewers, we've talked about this a fair bit. For any new viewer here who doesn't really know the implications of this, I'm going to go ahead and discuss this now. The 200-day moving average is one of the most significant data points when it comes to smooth moving averages or estimated moving average we have on a chart that can predict the overall trend of a market. When we're below the 200-day moving average, it is generally assumed that the trend is officially in a downward trend, or that the price will continue in that trajectory until it flips that 200-day moving average again. And we can see in multiple instances that basically every single time we've had these significant bottoms, we can see here, significant downtrend, back over here, significant downtrend. All of this occurs when we're underneath the 200-day moving average. All right, so it is a very significant data point here in the last few days, us losing this strong support, which we found basically support on since early January. We bounced on this for 3 months before losing it. So it is not an insignificant thing here, guys, and it's definitely not something to ignore. You should be very much aware of the dangers of what has just occurred on this chart. The candle we just printed, the last few day candles below the 200-day moving average is incredibly important to be aware of. All right. Sorry, I'm just coughing a little bit there, guys. Moving on from that, we have a few other things I want to point out, and that is the RSI. And I've talked about this a few times already, but I want to point it out one more time just for the new viewers. The RSI is one of the best indicators when used effectively, in my opinion, to predict huge market moves or overall market momentum. And I feel like it's one of those indicators that is often neglected in the sense that a lot of people, because they think it's so simple, they often look past, I guess, just how effective this indicator can actually be. And we're going to go ahead and bring up that 33.34, I haven't got it exactly, a 34 on the RSI, and show you that every single time we lose it, we can have these green lines indicate points of which we lose it, we see significant drops. 25%, 40%, 56%, 50%, 48%, 47%, 41%, and many of these times we have lost that 200-day moving average, 25% below the 200-day moving average. You know, look at these accounts, the red lines, losing 200-day moving average, 50% below 200-day moving average, 56%. So we are seeing, I would say, half of the puzzle here. The first part for a bearish case is that we lose a 200-day moving average. The second half is if we lose the 34.34, we see a very significant crash. So my price prediction of 24,000 will most likely reach as that RSI touches 34.34. So we're going to draw it in over here. Say this is the 200-day moving average on that weekly. We'll go back to the weekly. Here it is. Say it comes up to here. All right. We would expect the RSI to have touched at that same point in time around 34.34. All right, guys. So it would indicate a very strong point of reversal if we bounce from that point, or of course, if we lose that point, we could crash a lot lower to $12,000. All right. And why is that important? If we look on the weekly, we've seen every single time we bottom out, we pretty much touch that 200-day moving average. Cool. So getting that over and done with, let's move to the Bitcoin dominance chart. We can see the Bitcoin dominance is actually, in fact, at 42%. It has risen a fair bit in the last 7 days. If we go to a daily, it is pretty much steadily rising day by day over here. And we had a bullish crossover. It is definitely looking like we're going to be pushing higher over here. We did bounce from this very strong support zone, which we did find resistance on previously, indicating the price is going to be, well, the dominance is going to increase. And this is particularly bad for altcoins, especially in a downtrending market. When you have a downtrending market, all asset prices are losing value. All right. But if Bitcoin dominance is rising, it means altcoins in comparison to Bitcoin are losing more value in comparison to Bitcoin. All right. What does that mean? Well, it means altcoins basically get wrecked. All right. So buying altcoins for the long term right now, when we have rising Bitcoin dominance, when we have confirmation of a macro downtrend, when we have the real threat of a global economic crash with inflation rising and debt massively increasing, and we have the real threat that Bitcoin will stoop to around 24,000, if not lower, looking for long-term entries right now is not ideal. You should be trading, and trading with small amounts of cash. You'd be looking to buy particular bottoms, buying horizontal supports, and buying diagonal supports. For example, let's take SLP for example. Prime example of a coin to trade, not to buy. All right, so you don't want to be buying long term. But if we take a look at the chart, we have clear points of support and resistance. We have this downward trending resistance. We have this downward trending support, indicating we are in fact a wedge. We have a retest of this downward trending support with a retest of our major horizontal support line. This is where you should be looking for entries, guys. Right now, we're not looking for long-term coins. We're looking for catching. We're looking basically to catch bounces. We know the overall market is a downtrend, but we also know the price just doesn't go down. It goes down a bit, up a bit, down a bit, up a bit. It goes like that. It zigzags. So we're looking to catch bounces. Where should you be placing your orders? You should be placing your buy orders with basically within a few percent of these major horizontal or major diagonal supports, and you should be placing your sell orders at points of huge resistance, such as the 100-day moving average, major support zones, major downward diagonal supports. That is how you should be trading right now. If you're buying within the range, for example here, or even here, you're technically trading wrong. Your risk is phenomenal, it is ridiculously high considering the market environment, and you're setting yourself up for failure, guys. Now, just because a price has retested this zone, it doesn't mean it's going to break up. There's no guarantee in trading, particularly when we are in a downtrend and the market is so bearish. But it is always a good risk. When the risk is favorable, you should take it. All right. So moving back to the Bitcoin chart, guys. 100-day moving average over here, 200-day moving average over here. We are macro bullish when we get above the 200-day moving average, macro bullish. That is when you can start entering the market with larger amounts of money and looking at safer long-term investments. break the 100-day moving average, we can expect a push into this range. All right, we will either get rejected from that range, or if we do push above 42.5k, it can be a very strong bullish sign for a push into the next major resistance range. Obviously, we do have a chance of losing this downward sloping resistance and continuing downwards as per what the larger time frames are suggesting. I did want to point out we do have a potential descending wedge forming on the 4-hour chart, which is obviously a bullish pattern, and it would suggest a potential move from here up to $44,000. So we do have to keep in mind that is a potential, and if that happens, altcoins alike will most likely see a rally. Okay guys, I hope that was an educational video. If you have any questions, leave them down below. I'm always happy to answer you guys' questions. Remember to like, comment, and subscribe, and I'll catch you in the next video.